What if I told you that 7 specific mining stocks could turn $10,000 into $1 million by 2030? You would probably say, I am crazy. That is a 100x return. That is impossible. Except it is not impossible because it has happened before, and it is about to happen again. In the last gold and silver bull market between 2008 and 2011, junior mining stocks regularly delivered 50x to 100x returns. A company called Fortuna Silver went from 40 cents to $10. That is a 25x return. Endeavour Silver went from 50 cents to 12 to 24x first. Majestic Silver went from 40 cents to $25 over 6x. And those were returns during a bull market where gold only went from 700 to 900 less than a 3x move in the metal. Today, gold is heading to 10,000 to 15,000. Silver is heading to 300 to 500. The fundamental drivers are exponentially more powerful than anything we saw in 2008 to 2011. The mining stocks I am about to reveal are positioned in a setup that is more explosive than any I have seen in 35 years of analyzing markets. And I'm going to show you exactly why each one has the potential to deliver the kind of returns that change your financial life forever. But before I reveal the 7 stocks, I need to show you something critical, the 3 forces that will create these returns. Because without understanding the forces, you will not have the conviction to hold through the volatility. Give me 26 minutes. By the end, you will know exactly what to buy and why, and you will understand why the next 5 years could be the most profitable period in mining stock history. Part 1. The 3 forces creating 100x returns. Force 1. The metal price explosion. Gold is heading to $10,000 to $15,000. I have documented this extensively in previous analyses. The evidence includes historical 8-fold bull market multiples, M2 money supply adjusted targets, central bank buying at record levels, China secretly accumulating 8 to 12,000 tons, the BRICS gold-backed monetary reset, silver is heading to $300 to $500, breaking out of a 50-year trading range, silver to gold ratio at extreme historical lows. Industrial demand is surging for solar panels. Supply is constrained by declining mine production. These are not speculative targets. They are supported by multiple independent analytical frameworks that all converge on the same range. Force 2, operating leverage multiplication. This is the force that most investors do not understand, and it is the force that creates the extreme returns. Here's how operating leverage works in mining stocks. If a company mines gold at an all-in sustaining cost of $1,000 per ounce and gold is at $2,000, their profit margin is $1,000 per ounce. Now, if gold doubles to $4,000, their cost does not double. It stays at roughly $1,000, but their margin goes from $1,000 to $3,000. That is a 3x increase in profitability from a 2x move in the metal. Now imagine gold at $10,000. Cost is still $1,000. Margin $9,000. That is a 9x increase in margin from a 5x move in gold. Mining stock prices amplify margin changes by a further 2 to 3x multiple. So a 9x increase in margins can create a 20 to 27x increase in stock price. For silver miners, the leverage is even more extreme because silver miners have similar fixed costs, but silver's percentage move will be much larger than gold's. If silver goes from current levels to 400, that could be a 5 to 6x move. But a silver miner's margins might increase 15 to 20-fold, and the stock price amplifies that by 2 to 3x, giving you 30 to 60x returns on the stock. That is how 10,000 becomes 1 million, not through hope, through mathematics. Force 3, valuation rerating. This is the third multiplier, and it is just as powerful as the other 2. Mining stocks are currently valued as if metal prices will stay near current levels forever. Price to earnings ratios, price to cash flow ratios, price to net asset value ratios, they are all calculated using current metal prices. When metal prices surge, the market does not just adjust for higher earnings. It also increases the multiple it assigns to those earnings. Because suddenly mining companies are perceived as growth companies, not value traps, investor enthusiasm returns, momentum buyers pile in, ETF inflows surge, and institutional allocations increase. During the 2009 to 2011 bull market, the GDX Gold Miners ETF went from under $20 to over $65. A 3x return. While gold did less than 3x, the miners matched gold's performance, but individual miners dramatically outperformed the ETF because the ETF includes large, diversified miners that are less leveraged. Individual quality names with high leverage to metal prices dramatically outperformed, and junior miners outperformed seniors by a factor of 3 to 5x. Now combine all 3 forces. Metal prices surge. Operating leverage multiplies the margin impact. Valuation re-rating amplifies the stock price impact. The combined effect creates returns that defy what most investors believe is possible. Part 2, the China secret multiplier. Before I reveal the 7 stocks, I need to explain one more factor that makes this setup even more explosive: the China factor. China has been secretly accumulating 8,000 to 12,000 tons of gold. When they reveal this, the price impact will be instantaneous and dramatic. Gold will reprice violently higher. But here is what most people miss. The repricing will cascade through the entire mining sector. When gold surges to 10,000 or 15,000, every gold mine on Earth becomes dramatically more valuable. Not just producing mines, exploration projects, development stage deposits, even grassroots exploration properties, mining companies sitting on deposits that are marginal at $2,000 gold suddenly become world-class assets at $10,000 gold. A deposit with 2 million ounces at a break-even of 2,500 that nobody cared about at $2,000 gold becomes a deposit worth 15 billion at 10,000. The repricing of deposits creates a wave of mergers and acquisitions. Major producers desperate for new reserves will pay enormous premiums to acquire junior companies with quality deposits. Buy-you premiums of 100 to 300% above pre-announcement share prices are common in mining M&A. China's gold revelation is the catalyst that lights the fuse. The 7 stocks I'm about to reveal are the dynamite. Part 3, the 7 stocks. Now let me reveal the 7 mining stocks that I believe have the potential to turn $10,000 into $1 million by 2030. I have analyzed over 200 mining companies to identify these 7. Each one meets specific criteria. Criteria 1, a high-quality deposit with significant resources. Criteria 2, jurisdiction with acceptable political risk. Criteria 3, a management team with a track record of value creation. Criteria 4, maximum leverage to higher metal prices. Criteria 5, catalyst timeline within the next 12 to 24 months. Criteria 6, current valuation implying metal prices far below my targets. Criteria 7, potential M&A target for major producers. Important disclaimer before I continue. These are high-risk speculative investments. Junior mining stocks are volatile. They can lose 50 to 100% of their value. Position sizing should be small. Never invest more than you can afford to lose in any single name. This is educational analysis, not financial advice. Always consult a licensed financial advisor before making investment decisions. With that said, here are the 7 stocks. Stock number 1, First Majestic Silver, ticker AG. First Majestic is a pure-play silver producer operating primarily in Mexico. This is the same company that went from 40 cents to $25 in the last bull market, a 60x return. Why? It could 100x. First Majestic is one of the only pure-play silver producers of scale in the world. Most silver is produced as a byproduct of other mining. First Majestic's revenue is over 60% silver. This gives them maximum leverage to rising silver prices. Current production approximately 25 million silver equivalent ounces per year. At current silver prices, margins are thin, but at $300 silver, margins explode. Revenue goes from roughly $600 million to potentially over $7 billion. The stock price would need to increase 20 to 50x just to reflect that revenue growth. Additionally, First Majestic owns a significant gold operation at Jarrett Canyon in Nevada. This provides dual exposure to both gold and silver. Current market cap is relatively small compared to the revenue potential at $300 to $500 silver. The leverage is extraordinary. Stock number 2, Endeavour Silver, ticker EXK. Endeavour Silver is another pure-play silver producer with operations in Mexico and development projects in other jurisdictions. Why could it be 100x? Endeavour has a growing production profile with multiple development catalysts over the next 2 years. Their Terranara project in Mexico is advancing toward production and will significantly increase output. At current silver prices, Endeavour trades at a modest valuation. At $300 silver, their margins multiply by over 10x. Combined with production growth from new projects, the earnings leverage is exceptional. Endeavour also has significant exploration upside at multiple properties. New discoveries at higher silver prices would be valued at dramatically higher levels. Stock number 3, MAG Silver, ticker MAG. MAG Silver owns 44% of the Juanicipio mine in Mexico, one of the highest grade silver deposits discovered in the last decade. Their joint venture partner is Fresno, the world's largest silver producer. Why it could 100x? It is an exceptionally high-grade operation. High grade means lower costs per ounce and higher margins. At $300 silver, Juanicipio becomes one of the most profitable silver mines on Earth. MAG also has significant exploration potential at their Deer Trail project in Utah, USA, and other properties. New high-grade discoveries at elevated silver prices create massive value. The combination of high-grade production, growing output, and exploration upside makes MAG one of the most leveraged pure silver plays available. Stock number 4, Coeur Mining, ticker CDE. Coeur Mining is a diversified gold and silver producer with operations in North America, They operate the Rochester Mine in Nevada, the Kensington Mine in Alaska, the Wharf Mine in South Dakota, and the Silvertip Mine in British Columbia. Why could 100x? Coeur recently completed a massive expansion at its Rochester Mine in Nevada. Rochester is one of the largest silver mines in the United States. The expansion more than doubled production capacity. At current metal prices, Coeur generates modest cash flow. At $10,000 gold and $300 silver, Coeur's cash flow explodes by over 10x. The recently expanded Rochester operation becomes a cash machine. Coeur also has excellent M&A potential. Their North American asset portfolio in safe jurisdictions makes them an attractive acquisition target for major producers looking to increase U.S. exposure. Stock number 5, Silverest Metals, ticker SILV. Silverest is developing the Las Chispas mine in Sonora, Mexico. Las Chispas is one of the highest grade silver and gold deposits discovered in the last 20 years. Why? It could 100x. Las Chispas produces some of the highest grade silver in the world. Grades exceeding several thousand grams per ton are exceptional in the silver industry. High grade means extremely low costs and extremely high margins. At current prices, Las Chispas is already profitable. At $300 silver, the margins are extraordinary. Silverest is also exploring additional targets near Las Chispas with potential for significant new discoveries. In a high silver price environment, these exploration results would be valued at enormous premiums. Stock number 6, Barrick Gold, ticker B and ABX.2. Barrick is the world's second largest gold producer. I am including one major producer because not every position should be a high-risk junior. Why it could 50 to 100x from cycle lows? Barrick operates Tier 1 gold mines across multiple continents. At $10,000 gold, Barrick's annual free cash flow could exceed $20 billion. At $15,000 gold, it could exceed $30 billion. The current market cap does not reflect these potential cash flows. At $10,000 gold, Barrick's stock could trade at 10 to 15x current levels. If gold overshoots to $15,000 or more, Barrick could deliver 20x or more. Barrick also pays a significant dividend that will increase dramatically with higher gold prices. The combination of capital appreciation and growing dividends makes Barrick the safest way to get leveraged gold exposure. For risk-averse investors, Barrick should be the largest individual mining position. Stock number 7, Dolly Varden Silver, ticker DV. Dolly Varden Silver is a junior exploration and development company in British Columbia's Golden Triangle. They own the Dolly Varden and Homestake Ridge silver and gold projects. Why it could 100x. Dolly Varden is in the exploration and development stage, meaning maximum leverage to higher metal prices. Their combined resource base is growing with ongoing drilling. At current silver prices, the project is interesting but not game-changing. At $300 to $500 silver, the Dolly Varden deposit becomes one of the most valuable undeveloped silver assets in the world. The Golden Triangle location in British Columbia is an established mining district with excellent infrastructure. Nearby mines operated by major producers demonstrate the geological potential of the region. Dolly Varden is also an attractive M&A target. Major producers building silver exposure would view Dolly Varden's growing resource in a safe Canadian jurisdiction as highly desirable. The current market cap is tiny relative to the potential value at $300 silver. This is the kind of stock that could go from pennies to dollars very quickly in a silver bull market. Part 4, Position Sizing Strategy. Now let me show you exactly how to allocate $10,000 across these 7 stocks for maximum return potential while managing risk. Barrick Gold, 20%, $2,000, your anchor position, lowest risk, reliable leverage to gold. First, Majestic Silver, 15%, Woody, $500, largest pure silver producer, proven bull market performer. Coeur Mining, 15%, Wolf, $500, U.S. production, Rochester expansion catalyst. Mag, 12.5%, 1,250, highest grade JV with Fresno. Endeavour Silver, 12.5%, 1,250, growing production, Terranara catalyst. SilverCrest Metals, 12.5%, 1,250, ultra-high grade, Las Chispas cash flow. Dolly Varden Silver, 12.5%, 1,250, maximum leverage exploration upside M&A target, total $10,000 across 7 positions. This allocation gives you diversification across producers, developers, and explorers, across gold and silver, across Mexico, US, and Canada, while maintaining maximum leverage to higher metal prices. Part 5, the return math. Now let me calculate the potential returns. Scenario 1, gold reaches 10,000, silver reaches 300, Barrick 8 to 12x, 2,000 becomes 16 to 24,000. First Majestic 20 to 40x 500 becomes 30 to 60,000. Coeur Mining 15 to 3,500 becomes 22 to 45,000 Mag Silver. 20 to 50x 1250 becomes 25 to 62,000 Endeavour Silver. 20 to 40x 1250 becomes 25 to 50,000 Silver. 25 to 50x 1250 becomes 31 to 62,000. Dolly Varden 30 to 100x 1250 becomes 37 to 125,000. Total portfolio value 186,000 to 428,000. Scenario 2, gold reaches 15,000. Silver reaches 500 Barrick, 15 to 25x. 2,000 becomes 30 to 50,000. First Majestic, 50 to 100's 500 becomes 75 to 150,000. Coeur, 30 to 60x. 1,500 becomes 45 to 90,000 mag silver. 40 to 100x, 1250 becomes 50 to 125,000 Endeavour. 40 to 80x, 1250 becomes 50 to 100,000. SilverCrest, 50 to 100x, 1250 becomes 62 to 125,000. Dolly, Varden, 75 to 200x, 1250 becomes 93 to 250,000. Total portfolio IO value 405,000 to 890,000. Scenario 3, gold reaches 15,000, silver reaches 500 plus M&A premiums on 2 stocks. If 2 of the junior stocks get acquired at premiums of 100 to 200% above pre-announcement prices, the portfolio total can exceed $1 million. 10,000 becomes 1 million. Not fantasy, mathematics. Part 6, the timeline. 2025, the stealth phase. Accumulate positions while prices are low. Mining stocks begin their breakout from the 11-year range relative to gold. Early movers start seeing 50 to 100% gains. 2026, the awareness phase. Gold pushes through 6,000 to 8,000. Silver breaks 150. Mining stocks begin explosive advance. Portfolio doubles or triples from the initial investment. 2027, the acceleration phase. China's gold revelation begins. BRICS monetary reset gains traction. Gold surges toward 10,000 to 12,000. Silver reaches 200 to 300. Mining stocks in full gusher mode. Portfolio up 5 to 10x. 2028 to 2029, the mania phase. Retail investors pile into mining stocks. ETF inflows surge. M&A activity explodes. Silver reaches 300 to 500. Gold reaches 12,000 to 15,000. Mining stocks reach extreme valuations. Portfolio up 20 to 50x. 2030, the peak. Metal prices reach extreme levels. Some mining stocks overshoot dramatically. Smart early investors begin taking selective profits. Portfolio potentially reaches 100x from initial investment. Part 7, risk management. I would be irresponsible if I did not address the risks, because junior mining stocks are not for the faint of heart. Risk 1. Metal prices could decline or stagnate. If gold and silver do not reach the targets discussed, these stocks will underperform significantly. Some could go to zero. Risk 2, operational risk. Mines have accidents, equipment breaks, permits get delayed, grades disappoint, and management makes mistakes. Risk 3, political risk. Mexico has been increasing mining regulations and taxes. Jurisdictional risk is real. Risk 4, dilution risk. Junior miners frequently issue new shares to fund operations. This dilutes existing shareholders. Risk 5, liquidity risk. Some junior mining stocks trade with low volume. Getting in and out at desired prices can be difficult. How to manage these risks? Rule 1, never invest more than 5 to 10% of your total portfolio in junior mining stocks. The 7 stocks in this analysis should represent your speculative allocation, not your entire portfolio. Rule 2, diversify across multiple names. Do not put everything in one stock. Spread across all 7 to reduce single stock risk. Rule 3, use limit orders, not market orders, for junior stocks. This protects against poor execution in low liquidity names. Rule 4, have a thesis for each position and monitor it. If the fundamental thesis changes, exit the position. Rule 5, do not use leverage or margin for junior mining stocks. The volatility is already extreme. Adding leverage is reckless. Part 8, final message. I have analyzed over 200 mining companies to identify these 7 stocks. Each one represents a specific type of leverage to the gold and silver bull market I believe is underway. Barrick for safe, reliable gold leverage. First Majestic and Endeavour for pure silver production leverage. Mag Silver and SilverCrest for ultra-high-grade silver leverage. Coeur for US-based production with an expansion catalyst. Dolly, Varden for maximum junior exploration leverage. Together they provide a portfolio designed to capture the full power of the coming metal price explosion, with operating leverage multiplying the gains and valuation re-rating amplifying them further. $10,000, 7 stocks, 5 years. The mathematics support $1 million if gold and silver reach the levels that multiple independent frameworks project. History shows these returns are possible. The 2008 to 2011 bull market proved it, and the bull market we are entering has more powerful drivers than anything we saw then. The question is not whether mining stocks will deliver these returns. The question is whether you will be positioned to capture them. 5 years from now, you will look back at today's mining stock prices, and they will seem impossibly cheap. The way 40-cent First Majestic seemed impossibly cheap in 2008 before it went to a $25 position. Now, while prices are low, while nobody is paying attention, while the mainstream is still chasing AI stocks and crypto, the mining stocks are the opportunity, the metal prices are the catalyst, and China's gold revelation is the match that lights the fuse. Thank you for watching. If this video gave you specific actionable ideas, please hit like right now. Subscribe, turn on notifications, and share this with every investor looking for life-changing returns. Drop a comment with your favorite mining stock. Tell me which of the 7 you are buying first. I read every single comment. The clock is ticking. Position now. Good luck in the markets. I will see you in the next video.